How are you all feeling? Cold? Hot? Well, I'm lucky. At least I can walk about a bit. But I'm also feeling very cold. My room was cold. I thought I'd come here to be a bit warmer, but looks like you're not generating enough heat to keep me warm. Okay, you all have an idea why we are having this session? Well, the main reason is government wants you to be ambassadors. You all know what is ambassador, isn't it? Ambassador of GST knowledge, which we want you to convey when you go home, when you visit your friends, to get the message across to your parents, your grandparents, uncles, and relatives who may not have any idea of what GST is all about. As you can see from there, GST means goods and services tax. Grow and share together. All right? Grow and share together. So we don't want to look at GST as something bad, but something to help us grow and share the benefits. All right? So that's the theme. So GST doesn't mean goods and services tax alone, but also grow and share together. All right? Okay, let's have the next slide. All right, now you all know when you look at that or look at that over there, what is the direction? The government wants to transform the country. All right, so we have such thing called economic transformation program. You all heard of that, isn't it? So GST is part of the economic transformation program in a sense. We want to become a high-income developed nation. High income. What do you mean by high income, my friend? What does high income mean? What does it mean to you? High salary, okay? All right? High salary makes you into high income. How much do you think you should get to become high income? Not sure. 3,000 a month? 10? Enough to live in here only. Okay, high income means the government wants us to reach in 2020. What's the name they're given for 2020? Vision 2020. So by the time we reach the year 2020, we are supposed to become a high income developed nation. You don't know what a developed nation is, isn't it? What do you mean by developed nation? What do you understand by developed nation? What do you think? Develop. When you think of developed nation, what do you think of? United Kingdom, America, USA, France. That's developed nation, right? What do they have there that we do not have?
Big Ben.
What do they have?
Big Ben.
Okay?
Big Ben.
Big Ben. Oh, that's UK. England has got Big Ben clock. Alright? So developed basically means beautiful roads, right? Good infrastructure, high-speed broadband. Those are things you want, right? Developed nation, not to try to connect, sitting down waiting. So we want to reach that kind of level, alright? Where things are good. Move beyond being a manufacturer. Go beyond that. Service is more important than producing goods. That's what we mean by developed nation, right? So we go beyond industrialized, being a post-industrialized country. That's what it means. Then we go beyond manufacturing. Right? So emphasis will be on service. Service requires knowledge. So you have. That's why our government is looking for people to build up a talent pool. All right. So as you can see, all those things, technological advancement, be able to provide services, goods to other countries and so on. Right? So modernize our system of doing things. Okay, and then economic development. Our economy must grow at a better speed than it is doing now. Right? We are growing at about 5-6%, which is moderate. At one time we were reaching about 10-11%. Right? That is before the Asian economic crisis. Have you heard of the Asian economic crisis? Isn't it? 97. It went down. Right? Next slide. Okay, so you can see there from there that in 2009 our per capita income was about 25,000. In 14 we have reached about over 34,000 RM, and by 2020 we expect to reach around 46,500. So target for high income is considered as 15,000 US dollar per head. Correct? So per capita means per head of population. So that is what the government is aiming. Right? Let's go on. So how to achieve it? I mentioned just now the economic transformation program. The government is doing various things to try to push us up. Now we have tax system. Direct tax, indirect tax. Income tax is direct tax. But you find there's an indirect tax system under which, for example, sales tax, service tax, the government collects revenue. Right? You will not know that you have paid tax. Have you paid any tax or not? You're not sure. Have you paid any tax? Huh? Yes. See, yes, he said McDonald's. Obviously, if you gone to McDonald's, you would have paid service tax. 6%. Huh? So when you buy your clothes, your handbag, ladies, you would have paid sales tax probably on it. You buy a motorbike car, you would have paid excise duty on it. So many of us, we are unconsciously paying tax actually. Unconsciously, we are paying tax. But when you start working and earning income, that income tax you pay, that one you're conscious. You're conscious because you have to send you find your monthly deduction being done, and then of course, when you do have to file on 30th April, the following year, you will have to send your balance payment to IRB. But all these are indirect tax, sales tax, service tax. As you see, they're old, 1972, introduced in 1972 and 1975. They are rather obsolete tax systems. Right? So, why are they obsolete? You can say it's not advancing. Country is growing fast, but the tax system is not delivering. When you say delivering, not delivering, what does it mean? It's not giving the money the government needs to make the country into a high income nation. So if you can't deliver, kick it out. That's what it means, isn't it? So we need to transform. Alright? So it's not a good system, it's outdated, so we need to go. Can you have the next one? So government needs more money. Alright? Why does it need? You can see what it's doing. Needs money for providing medical health services. That's why you see the first one. Hospital Raja Paramaiswari Bainun. So, para, isn't it? The name should tell you that that's the previous Sultan's consort. So, para. Pendidikan, education, like you guys. When you are in university, schools, colleges, education, you are paying for yourself. But if you are University Malaya, lecturers are paid by the government. Right? UKM. The staff. Hospital, University Malaya, University Hospital. General Hospital. And then, of course, welfare. Right? Sorry. Get rid of this. Alright? So, welfare, as you can see, and of course, recreation facilities and all that. Okay, next one. No, you're going backwards. Okay, you can see army, fire brigade, and so on, police. What does it mean? It means government needs money to give you security so that you can run your life as normal without worrying. Right? Recently, remember there was some soldiers from the Zulu Sultan attacking Sabah. So we don't feel secure. That side, people may come. Right? So we need protection so that life can go on as usual. All right? As usual. So money collected is going to be used for buying equipment for the army, for the navy, for the air force, for the fire brigade, and of course for the police. And also not only buy the things, but also pay their salary, allowances, etc. Come, next one. Okay. So as I said just now, old tax system, sales tax, service tax is not delivering the cash. So the government got to rectify, transform, restructure whatever the current tax system in order to help the nation become a high income developed nation by the year 2020. Right? And what will that do? It will strengthen the economy, increase competitiveness of Malaysia vis-a-vis the other countries, gives you a chance to get jobs when you go out of the university, improve the standard of living, better life standard for us, and promote the development of technology. Because with GST, companies have to upgrade their computer system. They got to get the software. And software are being developed especially for GST. Alright? Okay, next one. As you can see, Malaysian citizens' welfare very important to the government. BRIM. What does BRIM stand for? Let's see, anybody can remember what is BRIM. Easy read, isn't it? Bantuan Rakyat Satu Malaysia. Right? So government has been giving money. What did they give last for 2014? Anybody any idea? BRIM? Any of your parents got BRIM handout? How much you get? Parents. For those earning less than 3,000 per month, they gave. Right? For 650, isn't it? 650 was given. So 2015 we will know tomorrow. Why we will know tomorrow? Anybody? Budget tomorrow. The finance minister will be delivering the budget. Alright? So as you can see, BRIM, the purpose of BRIM is to increase financial assistance to the poorer segment of society. Poorer segment. Right. Okay, carry on to the next one. Okay, now as you can see, with the GST coming in, government is trying to help the taxpayers, those who are paying tax, like your lecturers. Alright, the lecturers like me. How will we be affected? Our individual tax rate will be reduced in 2015. So tax rate now is 0 to 26%. Now it will be reduced to about 0 to 24%. Right? And because of this change, you can see the number of people who won't be paying income tax will be more than 300,000, because they're going to raise the threshold for paying tax, income tax. So you have to have a higher income to be paying income tax. So there will be quite a number of people who have been paying income tax now will be dropping out. Alright, will be dropping out. 300,000. Why the government wants to do that? To put more money in your pocket to spend. Disposable income. If they take less money out of you in the form of tax, you will have more money to spend. When more money to spend, you will go to the shops. You will buy. That will activate the economy even further. Alright? Economy cannot function if everybody saves all the money in your pocket. Never take it out. You've got to spend in order to get the economy moving. Otherwise, economy will not move very much. Alright? Okay, next one. Corporate tax, companies also going to be rewarded. GST, with GST they say, okay, we will reduce your corporate tax. Right? Companies pay tax at a fixed rate of 25% of their profits will be taken as tax. But with GST, they said we will reduce the corporate tax to 24%. Alright, so there will be a reduction in the corporate tax. So companies also will feel happy. GST comes, our corporate tax is going to be lowered. Alright. And you can see a company will have more income, more disposable income. Which means they also will have more money left over after paying the corporate tax to invest, create more jobs and so on. Right? Okay, next. Now we say just now, sales tax, service tax, obsolete. So come 2015, by 31st March, out. They will be abolished. So that's why nice red crosses there means no more service tax, no more sales tax. Alright? Instead, we will have GST. Grow and share together. Right? Message, grow and share together. So don't think of goods and service tax is a burden. Think of grow and share together. Alright, next one. Okay, GST will be implemented on April Fool's Day. You all know? So when April Fool's Day comes, don't make any April Fool's jokes. Because GST is going to come and make you more serious. Right? So GST will be imposed on goods, imposed on services, and will affect many businesses are going to be affected. And every stage of the transaction. So if the goods imported and it comes into the port, the importer will have to pay GST. When it goes to the distributor will be charged GST. Retailer, so on. So every stage will be GST then. Alright? So we call GST a multi-stage tax. Multi-stage. So every stage there will be GST collected. Right? Compared to sales tax and service tax, which are called single stage tax. Okay, carry on. Now we can see the GST standard rate is 6%. So government is starting with 6%. Right? So 6% will be the GST compared to sales tax, normally 10%. Got various rates, 5%, 10%, 20, 25%. Right? But GST will only be 6%. And service tax is already 6%, so that will be replaced with GST, also 6%. So you see, for $1, you pay 6 cents. Right? And for $10,000, you will pay GST of 600. So 6%, that's all. Alright, and you can see the kind of goods or services which are subject to this standard rate of 6%. So fridge. When you buy a fridge, $1,000 cost, you'll be paying 1,060. Okay. And then, of course, Chintan, Maggi, all that will have 6% GST. Furniture, you buy chairs, tables, etc. also will have GST at standard rate. Right, next one. Now, certain other products, government has been very, very sympathetic. There are people who will be affected. So they say, okay, certain product we are going to charge you at zero rate. So zero rate is how much tax you have to pay? Zero rate, how much tax? No tax. Not going to pay any tax. So 1,000 times zero, tax. You still only pay 1,000. There's no extra loading for tax. Alright. So you can see the kind of things which will have zero rate. Grains, means rice, paddy, wheat and all that. Grains. Seafood. Seafood means like crab and sotong and whatnot. And fish, of course, you all know, got fins. Right? Meat, goat, cows, whatnot. Chicken, but feathers. Edible oils, oil palm, corn oil and whatnot. Agricultural produce like vegetables and so on. And baby's milk, sauce, very important. Eggs, all sorts of things like that. So you can see a picture of that. Someone is wearing a spectacles, sunglasses, isn't it? The chicken is wearing sunglasses, or is a real face like that. Okay, so this kind of product will be zero rated. Next slide, please. And then we have a third class, which is called exempt. That means no tax at all. No tax. Exempt. Alright? So what are exempt? Train, to ride the train to anywhere, hometown, or take a bus, school bus, or the other buses. Taxi, highway, toll, water, land for general use, private education, all that, residential, financial service. No GST on this. These are exempt. Alright? So what's the difference? Why exempt and zero rated? It's still same impact, isn't it? Yes or not? Same impact, right? Zero, exempt, no tax, isn't it? Why is one called exempt? Why is one called zero rated? Any idea? Standard rate, all of you know. Standard rate, what percentage? 6%. Zero rate, 0%. Exempt, nothing. So zero rate, exempt, no tax will be charged on the consumer, the person who buys the goods. But there's a difference, isn't it? Otherwise, why call it by two different names? So the people collecting the tax, they will be treated differently. Alright? So later we'll talk about input tax and output tax. So if it's a zero rated, the input tax paid by the business person, he can collect it back from the government. Alright? So zero rated means the businessman can collect the tax he has paid from the government. Whereas in the case of exempt, he's not so fortunate. Alright? So there is a difference, you can see that, isn't it? So under exempt, can he collect the tax that he has paid? Can he collect or not? Let's see whether you are listening to me or not. If the product is exempt from GST, can the businessman collect the tax he has paid? Cannot, right? But with zero rate, he can collect the tax he has paid. Alright? So that's the difference. That's the input tax. Input means when you buy raw materials, if there's tax on the raw materials, you would have paid it, but you can collect it if it's a zero rated. It means when you are selling, you don't charge your customers any GST. Or rather you charge at zero rate, which means you don't charge effectively, you don't charge. Alright? But if the exam is, you don't charge at all. Alright? So with the exam they cannot collect back the GST they pay. And then of course there is such thing called out of scope. Alright? Out of scope means it doesn't come under the GST, what it calls picture at all. So government offered services like as you can see there, driving license, passport, or quit rent, they're charging you and all that kind of services, you will not be subject to GST. So out of scope. Okay, next one. Okay, GST implementation. These are important parts where you need to communicate to your parents, your relatives and so on. So a business operator must be registered with the Royal Customs Department. They are the government agency responsible for collecting indirect tax. GST is an indirect tax. Which means, indirect means you do not meet the collector, the customs. They are the authority. You never see them. They are invisible to you. Alright? They are invisible to you. Somebody is between them and you. And that is the businessman. He is the one who is going to collect the money from you when he sells you the service or the goods. Alright? So once they are registered, they can collect. They are empowered to collect the tax. Right? So once they collect, they must remit to the government. Remit means must submit, give it to the government. So there are periodical intervals during which they must submit their return form and the money. Right? So prices of goods and services, once implemented, must include the GST. What is the GST charged on that particular good, whether standard rated or zero rated. Zero rate, of course, there will be no change. Okay, come, let's go to the next one. Now, registration requirement, as you see there, businessman who has taxable turnover, all right? Taxable turnover, that means GST which has a standard rate, zero rated, they are taxable. Sick, in this case the figure is 500,000. So if your turnover, you all know what's turnover, isn't it? Turnover means sales, yeah, very good. Sales, 500,000 and above, you must register, mandatory. The word is mandatory, you all understand what is mandatory, isn't it?
Yeah.
Compulsory. You got to register. Otherwise, the strong arm of the law will come down on you. Right? So you have to register. The businessman must register. But what happens if you're only getting 490,000? 400,000 turnover. You want to register? Huh? Don't want to register. Why? Why not? Why do you want to register? You can register, voluntary registration. If you want to register, you can. Right? Why if you are getting 400,000 only turnover, you want to register? Voluntary, you can register. Why do you want to register? Why? You want to register only if you got benefit, isn't it? Who wants to register if you don't have any benefit? What benefit can you get if you register voluntarily? benefit? What benefit can you get if you register voluntarily? Who can give me the answer? You can claim input tax. Because only a registered person can claim. If you are not registered, you pay tax on your raw materials, but you cannot claim anything. But if you are registered, you can claim the tax that you have paid on your raw materials. But because your turnover has not reached 500,000, it's not compulsory. You can voluntarily register. So that's the purpose of giving you this chance, this window for you to go in and register and claim your input tax. Okay? But once you go through the door, what happens? You got to look at one hand, money is coming in and you can claim the input tax from the government. What about the other side of the coin? You've got to have GST software, you've got to have your people trained. It costs money, isn't it? So what happens if you go in there and find, costing me a lot more money than I'm going to get back from the government. So I want to walk away. But the government says, sorry, my dear friend, you cannot walk away for 2 years. So there is this. You go in, you stay in at least minimum 2 years. Suffer if you need to suffer. Enjoy if you can enjoy. Alright? Then you can go out. If you're suffering, get out. After 2 years, you can apply to get out. Alright? But you can't just walk in and walk out as you like. Under the voluntary system. Okay, let's go on. Next. Okay, sample invoices. You can see one GST is implemented. Businessman, when he sells goods, he must give the customer a full tax invoice. Alright? But it's not feasible to give full tax invoice, especially if you go to the supermarket and buy a few things. It will be too time consuming for them to give a very detailed full tax invoice. So they can give you a simplified tax invoice, which is on the right hand side. Alright? Okay, so full tax invoice especially will be useful if you are a what? What's the usefulness of full invoice for you? Audit. But for you to claim your tax from the government. Because you're a businessman, you're only an agent for collecting the tax. You are not actually paying the tax. Right? You're only agent helping the government to collect the tax. So you can, with a full tax invoice, how much tax you are paid, you can use it in claiming your input tax. But if you and I go to the supermarket, we are not interested in the full tax invoice, isn't it? We just want a receipt saying how much we pay. And there he'll give you some information how much tax has been collected from you. Alright? So most of us will not bother. We are not really interested in the detail. But if you get a simplified tax invoice and you are a businessman, and let's say you paid $1,000 in buying something from supermarket, but which you need for your business operations, how much tax would you have paid? Let's say all of the items are standard rated, $1,000 I spent. How much would you have collected? How much would you have paid in tax? How much? $1,000 I bought. How much tax would I pay? Assuming the value of the goods is 1,000. Right? $60, isn't it? So I would have paid 1,060. Alright? 1,060. Okay? And the supermarket gives me a simplified tax invoice. What happens? I want to claim from the government. Can I get my $60 back? No, they will only give you $30. Alright? So, how to get $60 back? How will you get $60 back, my friend? You bought $1,000 worth of things on which you had to pay $60 tax, right? 6%, all of them standard rated. So, if you need to claim back, then you've got to go for a full tax invoice, all right? Which means you've got to ask the company that's selling you, please give me a full tax invoice, all right? In order to claim the full amount. Otherwise, you only get 30. Come, next one. Okay. So you can see GST would enable registered business operators to claim input tax credit. So whenever a businessman buys goods and services, he can claim the input tax credit. Alright? So for that he needs a full tax invoice. If he gets a simplified tax invoice, he can only claim $30 per invoice, not more than that. So if the invoice says $60, he can only get $30. Okay. So you can see the difference between a simplified tax invoice and a full tax invoice. Alright? Okay. So whatever, you can see the businessman, he buys goods, he buys services, he buys tools, he incurs business expenses, he buys plant and machinery, computers, etc. On this there will be GST. Right? He can claim that back because these are inputs in running his business. Inputs in running business. He can claim it back. Okay? GST would not increase the cost of the business operators. So even though they are collecting the tax, it is not part of their cost. It is not part of their cost because they can collect it back from the government. Alright? Okay, so they do not really pass the tax that they pay on to the customer. Alright, okay, next one. So you can see from this, when they purchase, they have to pay tax. We call it the input tax. Right? And when they sell, they got to charge their customers tax. That's called the output tax. Right? So when they buy, they pay input tax. When they sell, they pay the output tax. Right? So there is an offset. Offsetting, you all know what's offset, isn't it? Which means that whatever they pay can be offset against what they collect. So if there is a balance, they got to pay the balance to the government. So the seller must pay the difference between what he has paid and what he has collected to the government. Alright, so they do not really pass it off to the customer as such. Only the difference is collected and is paid to the government. So that's why we say multi-stage. Each stage the government is receiving money. Little by little, ultimately the customer pays the 6%. So eventually the government will get the 6%, but it's not collected in one go, but through each of the stages. Right? Okay, carry on, next one. Okay, you can see a little example here. So when the businessman sells, say $100 is sales, he must charge 6%, assuming standard rated, product is standard rated, 6% he must charge, and that will be, so he will be charging $106, including the tax. So the $6 will be the output tax. Right? So when he sells, right? But let's say the cost of sales, that's the goods that you bought in order to sell, and he has paid $3. 6% on $50 is $3, and that is his input tax. All right, and then expenses like other things that he has bought in addition to the goods. Could be services, could be other kind of goods. Help him run the business. He has bought $15 and he has paid 90 cents input tax on it. So he has paid $3.90 in input tax. But when he sells, he's charging 6% on the goods, $100. So he has collected $6. So he has paid $3.90. So he has to hand over $2.10 to the government. He has to hand over $2.10. All right? You all understand or not? So only he needs to hand over the difference between what he has paid and what he has collected. All right? Okay, next. Let's go on to next. Now, because of this 6%, of course, government is worried that the unscrupulous traders will raise prices and so on. So it has introduced Price Control and Anti-Profiteering Act. Right? So we introduced a few years ago, and this one requires, as you see, business operators to maintain net profit rates before and after GST. That means there shouldn't be sudden change as a result of GST coming in. All right? Don't shock the people by raising prices and so on. All right? So control will come through the act. There will be people out to monitor. So government will monitor revised price of goods to ensure price has not been suddenly raised by the traders. So there will be enforcement units of government which will monitor business operators in the whole country. So everywhere they will go and check prices to see that the businessmen do not raise prices suddenly without any reason, just using GST as an excuse to raise. Right? So government will provide consumers with guidelines prior to GST coming in on 1st April 2015. Come next one. So you as the consumer, right? We are not running businesses, so we are consumers, all right? We are the ones who ultimately pay the GST. Now we must understand fundamental concepts of GST so that we don't get taken for a ride by the businessmen, all right? So government to vigorously undertake training and publicity activities. So this is part of the government giving publicity, right? Training the people. So accounting students will be trained during the next 3 to 4 years that you'll be here, accounting business students, right? Accountants are being trained so that they can help businessmen deal with GST when it comes on, all right? And you can see from now to January 2015, we are asked to visit GST websites or the website of relevant government department, get accurate information on GST. The government will block anybody trying to advertise saying, better buy now, GST comes, too expensive, stop. That kind of campaign by unscrupulous traders, right? Government will handle matters to ensure economic stability. So they don't want the economy upset by unscrupulous traders saying GST. So they will try to give you knowledge. So part of this awareness talk that I'm giving you is to help you explain when you go home to your parents, your relatives and so on. Tell them that this is for the good of the country. GST is for the good of the country. It's going to help us move to become high income nation. Right? Next one. So from January to March, government will go into more detail mode. It will give you guidelines on how to purchase, right? So that you don't get overburdened. And then domestic trade officers will begin to monitor and check on business operators to see that they suddenly don't jack up the price. Then 1st April, that's the implementation date. Price tags must show the GST. Alright? And then 24-hour shops, like 7-Eleven, overnight they must revise the price tag. Midnight, just like going for petrol, the day petrol price rise up, we're all waiting to fill up our petrol. So 7-Eleven and all these people have to change their price tag. At midnight they must change. Okay, so any price movement must be due to market demands, not due to GST. And anybody is flouting the law, obviously, please help report them to the relevant authorities. Anybody not obeying the law. Right, next page, next slide. Now, you all note down the website, GST Customs Government, for more information. Right? And anything you want to raise, complaints and all that, you can refer also to Ministry of Domestic Trade and Consumer Affairs. They are the one going to do the monitoring work, policeman work. See that nobody raises prices and so on. Alright, so note down where to go and get more information. Of course, the accounting firms also got websites you can do, like PricewaterhouseCoopers and all that, KPMG and all that, they have also websites. So you can go to them also to understand about. Yes. Next one, which I think is thank you.